Mortgage rates have come down to some of the lowest levels we've ever seen in history. For all of you opportunists out there, this can be a simple way for you to save hundreds of dollars a month on your mortgage if you know how to refinance the right way. And by the end of this video, you'll know exactly how to do that. What's up, everybody? I am Jasprit Singh from theminorityMindset.com and welcome to the Minority Mindset. Mortgage rates have plunged to new lows, which is not good news for banks because that means they make smaller margins or profit on their loans, but it can be great news for you if you were thinking about getting a new mortgage or if you were thinking about refinancing your mortgage. I mean, for the first time in history, we saw mortgage rates fall below 3%. If you own your own home and you have a mortgage, this can be great news for you because that means you can refinance out of your current loan and get a new loan at a lower interest rate and save hundreds of dollars a month or thousands of dollars over the course of your mortgage. Just look at the numbers. If you took out a $500,000 mortgage at 5% interest, you will be paying something like $2,700 a month on your mortgage. But now, for the sake of this example, let's say you haven't paid down a penny on your mortgage and now you refinance out of this $500,000 loan and you get a new $500,000 loan, this time where you only pay 3% a year in interest. Now, you'll only be paying $2,100 a month on your mortgage, which means you will have an extra $600 a month in your pocket. I mean, just imagine how much extra guac you could buy with $600 every month. Whoa. But before you go in, just call your bank and tell them that you want to refinance. You want to make sure that you're refinancing the right way because there's more than one way to refinance your mortgage, and that's what we're going to be talking about in this video. But before we get into that, hit that thumbs up button below because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. Mortgage rates are falling because the Central Bank of the United States cut interest rates as a way to stimulate the economy. Now, this is not good news for banks because that means banks make smaller profits. And this is not good news for your savings accounts because that means your bank is going to pay you less money in interest on your savings account, even though they were already probably paying you next to nothing. But it is great news if you have a mortgage because that means you can refinance and save thousands of dollars on your mortgage. There are a few different ways that you can refinance. You can refinance in the way that's going to save you the most money over the long run. This is my recommended way. You can refinance in the way that's going to save you the most money on your monthly payments, or you can refinance in a way that's going to leave you with the most cash right now. If your goal is to save as much money as possible and be debt-free ASAP, then what you want to do is refinance your mortgage with the smallest refinance amount possible and then get the lowest interest rate possible. And then when your payments fall, you don't want to pay this lower monthly payment amount. You want to continue paying what you were paying before. To put some numbers on this, let's go back to the previous example where you have a current mortgage of $500,000 at 5% interest. Now, at this mortgage, you are paying $2,700 a month. Now, if you go out and refinance, you will get the same $500,000 because that's all you want to take out now. You're not taking out any extra cash because you only want just enough money to pay off your current mortgage. So you're going to take out $500,000 at 3%, and now your payments are going to drop to $2,100 a month. But just because your payments are $2,100 a month does not mean you are going to be paying $2,100 a month. You are going to continue paying $2,700 a month like you were before, but now that extra $600 a month that you're sending, I want you to make sure that the $600 is going directly to your principal balance, because when you do that, this is going directly to pay down your mortgage balance without paying an extra penny in interest. If you do that, you send this extra $600 a month directly to your principal balance. Now, you will be debt-free, not in 30 years, but in 21 years, so you'll be debt-free 9 years faster than expected. Remember, I did this refinance based off of the idea that you haven't paid down a penny on your mortgage yet. If you have paid down your mortgage, which I know many of you probably have, then you just gotta adjust the numbers, and if you follow this method, you will still be debt-free much sooner than expected. Essentially what you're doing is you are lowering your monthly payment, but you're paying the same amount of money as you were before, so more of your money every single month is going directly to your principal balance, which is helping you pay down your mortgage even faster. If your goal is to save the most money on your monthly payments, then you're going to do the exact same thing as before, but now instead of sending in a $2,100 check on your mortgage and the additional $600 monthly check, which will go directly to your principal balance, you are only going to send the $2,100 check and keep the $600 in your pocket so you can go out and buy whatever you want. even if that means extra guac. Hopefully you're investing that money. If you want to have more cash in your pocket today, then you would do something called a cash out refinance, where now instead of taking out $500,000, you would take out a new loan of $600,000. $500,000 would go to pay down your previous loan, and then the other $100,000 would go into your pocket tax-free. Maybe you have an investment opportunity, or you want to go and buy some more real estate as an investment. This is a way for you to get some more cash to do that, but you should also understand that this strategy comes with the most risk because now you are taking out more debt. And just in case you're wondering, no, Gucci is not a good investment. Now, before I get into how to analyze what's the best strategy for you for any of this to work, you want to make sure you're getting the lowest interest rate possible, which means you need to do some shopping around, which means you don't want to just accept the first offer that your bank gives you. The simplest way to do that is by using a free online service like our sponsor Credible, who will find you the lowest interest rate possible by comparing multiple different lenders for you. All you have to do is go onto their website and enter in a few pieces of information, which just takes a few minutes, and then Credible will get you pre-qualified with different loan or refinancing options. That way you can make sure you're getting the lowest interest rate possible. Their service is completely free to you. Getting a free quote does not affect your credit score. And now you don't have to deal with a bunch of bankers trying to sell you on an overpriced loan. So if you want to learn more and see how much money you can save on your mortgage, I got the link to do that in the description below. Minority Mindset is a partner with Credible, so if you use them, we will get compensated, but there's no additional cost to you. I mean, the service is completely free for you to use, so if you want to learn more and get pre-qualified with a free quote, I got the link to where you can do that in the description below. The refinancing option that you pick is going to depend on your financial goals and your investment opportunities. If your goal is just to be debt-free as fast as possible, then go with the first option of refinancing, getting the lower payments but paying the same amount of money as you are today. That way you can be debt-free fast. Yeah, I know it's a little bit more of a sacrifice, but once you're debt-free, then you'll be able to breathe a whole lot easier because you won't constantly have money going out. If you feel like you're stretched too thin right now financially, then go with option number 2, where you just lower your monthly payments and you pay this lower monthly amount, because now you'll have more cash in your pocket each and every month. This option might extend the life of your mortgage, but if you're really having troubles making ends meet right now, this plan can help you have some more breathing room financially, and hopefully you can use some of this extra money that you have to invest. That way you're getting a better return on your money than what you're paying on your mortgage. If your goal is to live larger and you have some investment experience and you don't mind taking on more risk, then taking on a cash out refinance can give you extra cash to invest. But I'm not going to feel right telling you this without giving you a full disclosure, because this comes with the most risk, because if something goes wrong with your investment, you are risking your home. I have heard many success stories, and I'm sure you have too, of people pulling cash out of their home to invest in their business idea or to invest their money, and it has worked out great. But for every single one of those success stories, there are probably 5 to 10 failures that you've never heard about. Again, I'm not saying it's not possible or that you shouldn't go all in on your dreams. What I'm trying to say is you need to understand the risk, and it helps to know what your investment opportunities are with this extra cash. If you want to take this extra cash out and you want to go on a vacation or you want to buy a boat, do not do that, okay? That is one of the worst things that you can do with your cash, especially on debt. I'm a real estate investor, and if I took out a loan from the bank right now to go and buy an investment property, I will get much higher interest rate than what banks are charging on mortgages, because banks charge higher interest rates on commercial or business loans than they do on personal mortgages. So if you're a seasoned real estate investor, doing a cash out refinance on your home can give you more cash to invest in real estate at a lower interest rate than if you just went and got a commercial or business loan. But again, if you've never invested in real estate before, or if you have no idea of how your business idea is going to work, do not risk your family's home to go bet it on an idea that you don't even know if you're going to fully commit to. This is why you need to understand what your financial goals are and what your investment opportunities are, and this is what financial education is all about, because when you have the right financial education, you will know how to use your money in a way that will help build you the wealth that you want. And if you're looking for an easy way to up your financial education, we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you do want to learn more about investing in real estate, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.